Yo, what is good? We are back with another video. It has been a while since I have uploaded recently. Still trading, I was just refining my edge and understanding ICT concepts a lot better. So I am going to be giving all the knowledge that I have, and I just created a free Discord, so I'll put that in the bio or in the description below. But let's get right into the video. We are going to be going over internal and external liquidity. And remember, price is fractal, so anything that you see on a higher time frame also happens on the lower time frame. External liquidity is anything outside of the range by highs and lows. We rotate from external to internal, internal to external, vice versa, keep going back and forth. Internal liquidity is anything within inside the range. We're looking at a weekly chart and we have our range identified by this high and these two equal lows. This would be external liquidity on a weekly time frame. But if we head up to the monthly, there's nothing there. So on the weekly, we are playing within this low to this high. So this is our external liquidity range. These lows, this high. I'm not going to be going over how to identify setups by doing this. I want to start doing ICT concepts as a playlist so you can go through and learn a lot better. So we are going to be going just over this internal versus external liquidity here. And if you don't know what liquidity is, I don't know why you're on this video. So if we take a look here, we see that we have two equal lows over here. And we rotate from external to internal and internal to external. So after taking these two weekly lows, we rotate where? Back into external. Back into internal, I'm sorry. Because this is internal because we are playing within this dealing range. Okay, so we are playing within this dealing range. We come back to an equilibrium price range into internal liquidity just to rotate back down to external liquidity down here at these lows. So we are rotating from external here to internal fair value gap within a premium of this dealing range that we are currently in, just to rotate back down to this external level. And then as you see, as we take out this external low, we head up to this external high. Why? Because on the weekly time frame, we have no imbalance to rotate into. So if we want to frame trades off of this, I'm not going to go deep into it, but we will go to the 15, 5, and 1 minute just so you guys can understand that price is fractal and whatever happens on a higher time frame also comes down to the lower time frames. So we're going to head to the 1 hour. So right here on the daily chart, we can see that price found a support here at this volume imbalance. And heading down to the lower time frame, the 1 hour, we will be able to frame a narrative from this. So we have our dealing range, right? We have our hourly high up here, and we have our hourly low that traded into that volume imbalance down here. So we have sell side, external, and external high. Why? Because this is the dealing range we are currently dealing with on the hourly chart. So we have our external level, we have an internal sell side here. Why? Because this is inside of the range we are currently dealing with. We have a range from here to here that we are dealing with. So sell side resting here is in between that range. So this is an internal sell side level. And if you see right here, we have internal fair value gap. So we rotate down into here, taking out all these sell stops, also into this volume imbalance. And we're going to get rid of this so it's much easier to see. So we find support here at this volume imbalance. I think that's a new day opening gap. It is. Taking out all this sell side liquidity, and now we have internal here. So we have internal, external, external, and now we have another internal range liquidity. What happens whenever we find support here? We run this fair value gap, and as you see, we trade into it 1, 2, 3. After we take out this external high, rotate into internal liquidity, which would be this inverse fair value gap, and then we rotate back into external range liquidity. Why is that? The external liquidity here? Because we took out this high, so now we have a new dealing range we are currently dealing with. And you can even say that this is external because we make a high, we make another low. So if we are zoomed in here on the 15 minute, we can actually say 15 minute, we come down on the 15 minute, this range that we are currently dealing with here after taking that external high is here to here. So now we have a new range identified, and this is how you start to see that external and internal is fractal, because on the 15-minute, this is our external level, buy side, external level, sell side. After one of these levels are taken, you want to wait for an accumulation phase, because you don't know if price is going to want to sell off. If it does want to, let it tell you that it is going to sell off, or you don't know if it's going to accumulate to then push higher. So we have our new dealing range set on the 5-minute chart. We have our external high and our external low. Price is chopping around in here, and this right here is where we will get our first trade to frame off of, because we take an internal low, so we have a sell side here, and then we run straight through this fair value gap. So now that we've taken an internal low and expanded through this internal fair value gap, what does that mean? If we are bearish and are going to head to this external 15-minute sell side level, we should hold this fair value gap and come up, sweep, then head down lower. But we don't. We run straight through it. We should hold this to act as inverse to come to this high and then our external draw, which is up here. That is how you are framing trades off of this. I said I wasn't going to do it, but that's how it is. As soon as you sweep an internal low, you look for a fair value gap. If we run it, we should go to the internal high on whatever time frame you were looking at. So if this is a 5-minute chart and we sweep this low and it doesn't look like we're displacing through it, and we have a 5-minute fair value gap, and this is our 5-minute high, we should go to this high before returning to an internal range liquidity. If price wants to run straight to external, you have to let price tell you that it is going to, and you will know that it is telling you, because we will get a big displacement move like this that continues, rotate into a fair value gap, and continue. Right here, whenever we take an internal low, we should hold this, get displacement lower on a lower time frame like the 1-minute, to head to that external 15-minute liquidity down here. So if we want to go down to a 1-minute, this is how, if we want to head down to a 1-minute, this is how you're going to want to frame a trade off of it. If we're looking at a 15-minute time frame, we have an external low down here. We have an external high right here. What do you see? We take that high. Okay, now we're waiting. Okay, here's Asia. And now that New York, London here, we have a new high. Now we have a new dealing range. Okay, so we have a new dealing range from this low to this high on the 15-minute time frame. Price is fractal. If you are looking at an hourly chart, what is your dealing range? Your dealing range is this low and this high. That's your dealing range on the hourly. But we're looking at a 15-minute. We are playing within this low and this high. So what do we wait for? We are waiting for price to tell us where it wants to go to. So we have this internal low, and what do you notice right below it? We have a fair value gap. Okay, so this is actually Friday's price action. I didn't trade because I was so bored at watching the market Friday. Right here, I could have found a trade somewhere in here, because it looks like on the 15-minute chart, actually I'm not even going to go into it because this is about internal and external. So after we take this internal low with a internal fair value gap, what should we do? We should wait. Okay, heading down to the 15-minute. Okay, price is just chopping around. Oh, look. So we come down. Let me move this over here, fair value gap. That's that 15-minute fair value gap with internal sell side. So, okay, we're on the 1-minute chart. So we come down, pretty much make relative equal lows, expand up, come down, drive into this fair value gap and taking out all these sell stops. We expand higher. So what are we waiting for? We're waiting for price to tell us what it wants to do. Okay, so from this fair value gap right here, where should we go? We should actually head up to this high. But price is not delivering good this week. All of this price action was not good this week. So what do we wait for? We wait for price to tell us what it wants to do. Okay, now we come, we sweep a new low, displacement higher. Okay, so let's see if price wants to hold this fair value gap. Okay, we hold, we expand higher. Okay, here's a second entry. Hold, 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 expand higher. Where do you think the draw should be? Well, if we're holding all these fair value gaps, we shouldn't just run this low just to rotate back down. This looks like a low resistance liquidity run. What does that mean? Failure swing. Failure. Actually, no, this high got swept. Barely. I'd just consider that relative equal highs. So failure swing, failure swing, failure swing, and we expand down, take out this low, external low, down here, then we take out internal 1 minute, and then we expand up, come into this fair value gap. We are holding bullish PD array right here, expand higher, holding, holding, holding bullish PD array. We run this high, and we aren't just going to run this high just to come the whole way back down. Low resistance liquidity run, we should just, if we're going to run this one, we're not just going to run it and then not take this and this. So what happens? We take out this high, rotate back into a fair value gap. So what did price give you? 1, 2, 3 entries before taking out this external high on the 1 minute chart, right? But if we look at the 15 minute, this high is nothing. This literally is nothing, right? But what do? We take this high, we rotate into here, we expand out of it. If my chart loads, this is going to be the last example. I don't know why my chart's, there we go. So right here is that 15-minute fair value gap. Okay, so if we are going to rotate lower, we would want to see displacement through a low. So right here we have a new low, swing low, right? Right here we displace through a low. Okay, yeah, price looks like it wants to go down. Okay, we have a new low. Price peeks its head through this internal low. Why is this an internal low? Because it's a swing low. Higher low up here, lower low, higher low beside it. Boom, swing low, take it. Oops. We're starting to expand, boom, our first fair value gap. Okay, let's see if price respects it. Okay, it looks like we're going to go through it, but then price recovers from it, goes up, and here can be a second entry right here, or I'd probably look to the left and take it off of this, because it held as bearish PD array before. So what's price going to want to do? Hold it as bullish PD array to then expand to this external high on the 1 minute chart. But if we look at the 15 minute, it's an internal high. Why? Because we are playing within this range to this range right now. External and external low. So this is how you start to see price expand. Look, what happens after we take this high? So we take this high right here. Where do we go? Internal liquidity. Boom. Make sure price tells you that it's going to want to hold. I think this is it. Yeah, we peek our head above it, come down. Price actually doesn't give you a single entry here. Yeah, price didn't give a single entry there. But, boom, we expand up. And then we sell off. So this is where we're at now. But this is how you start to understand what internal versus external liquidity is. External range liquidity is anything within the range by highs and lows. So in this right here, I guess I shouldn't have stopped it. All this price action right here, oops. Boom, 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 boom. This is the dealing range we are currently in. So right here are our external sell side, external buy side. This is how you can start to frame trades off of it. We sweep an internal high. What do we wait for? Zoom in. Okay. Oh, jeez. Zoom in. Pretend this. Oh, gee. I can't zoom in that far. Okay, so pretend we're on a 1 minute chart here. So we take a internal high on, let's say, the 15 minute, and we go to the 1 minute. We see displacement back inside of what? What can I use? This range. This range right here. So we see displacement through this range. So now we're on the 1 minute chart. We see displacement, boom. Hold on. Let's say we are on the 1 minute chart and we come down, sweep again, displacement through this low, fair value gap. Where should we go? We should go to this low. So price takes it out. I actually drew it, didn't mean to, but I did. Price takes it out. So now what are we looking for? If we get displacement within this range, so we get displacement up, fair value gap entry, target this high. And this is where you take partials and let your runners go to the external draw. So up here, and if you're taking shorts, down here, and this is how you frame trades. Internal high swept, displacement on the 1 minute chart. We take the fair value gap targeting the internal low, runners to the external level. Okay, look, we get stopped out. It is what it is. You will get stopped out a lot. But this is how you can start to understand what internal versus external liquidity is. Hope you enjoyed the video. I'm going to be back to uploading trading videos again. I got bored uploading videos, so I quit for a little bit, but we're back, baby. Let's make some bank. If you want to join the free Discord, it's down below. Follow me on Instagram, drop a like on the video, and let's rock, baby.